Today, you are about to uncover the secrets of sniper trading. You'll learn how to use economic calendar data for sniper trading. I'll show you how the markets are manipulated before big events and how you can use it. Finally, I'll show you how I keep making sniper trading achieving great results, and I'll explain step-by-step trading method that I used with my last trade. There are so many subjects to cover. If you're ready, let's start. Since many people ask me for a structured table of contents of the free price action course, I prepared a very detailed table of contents with PDF files and video links. You can access it on Google Drive or directly from my website. You can easily find any subject that you look for. However, I strongly suggest you watch the course in order, because all the price action concepts are interconnected to each other. Let's talk about how I made over 100% profit or 4R clean trade by recognizing the traps inside traps that were placed by social media and market makers. This will be a video that you will need to watch over and over again. Let's go step by step. The first thing that you should understand, this candlestick. This is an extraordinary candlestick that everybody should know. This is the Jerome Powell candlestick, or you can call it the Fed candlestick, which decides the United States interest rates. The first thing is first, are you checking your economic calendar before trading? Probably not. Let's understand the economic calendar quickly. You can find the economic calendar on any website. The site that I currently use is the Forex Factory. I'll do whole another session about the economic calendar, so do not worry. The most important thing is that you should check for these red icons. When you see these red icons, you should know a worldwide important data about to be released. These are commonly interest rates, inflation rates, growth rates, GDP, central bank talks, unemployment rates, manufacturing indexes, PMI data, and so on. Do not force yourself to understand the data unless you are an investor. The only thing that you should know is this is the time that markets are manipulated the most. With the release of these data, markets move in one direction with amazing force, and we have no idea which way it will move. If you trade stocks, you'll understand what I'm saying. You'll witness an amazing earning report from a company, but the stocks drop sharply, or very poor earning report, but the stocks skyrocket somehow. Do not ask me why a company with amazing earning report drops sharply. I think you know why. I think you know how these markets work. So, what should we do? First of all, we shall not trade these news and data releases. We are saving our money by not taking a 50-50 chance. Secondly, these catalysts will leave giant imbalances behind that we can use later on as targets and entries. Look at the size of the imbalance. It is incredible. How did it happen? I noticed that the interest rate may be raised by 100 points. Social media and news were full of bad news and high interest rate expectations. Then the interest rate decision was 75 points. Of course, markets reacted to it as good news. Do not get me wrong, nothing is great. Just compare your grocery and utility bills with last year. What is the real inflation that you feel in your home? So this fake rally started. It's like manipulation inside manipulation. For a worldwide true rally, I would like to see inflation rates be stable first, better manufacturing indexes, PMI, and increased industrial production, and so on. Enough of macro talks, let's get back to trading. We already talked about this chart last week. Price reaches the greed stage with all the false news and social media influencers. You can easily notice how the equal lows keep forming here. It is a liquidity pool. And also this large imbalance. The largest imbalance in trading history. Just kidding. However, this is a pretty big imbalance, thanks to Fed and Jerome Powell. I want to repeat that big imbalances like this are created by catalysts like earning reports, market makers, economic calendar data, and so on. Equal highs and lows combined with imbalances are probably the most important thing that you should keep looking at all the time. Let's check how my trade is formed. First of all, you can notice the high quality break right here. Very strong red candlesticks, very powerful ones. Also leaving imbalances for me that I love. You can also draw your premium and discount zones here to find optimal and great entry points. Now look at what is here. Another equal highs and imbalance. So what is happening here is a double trap to be hunted on both sides. As I know my name, I knew that both of these equals and imbalances were going to be hunted. Since we are in the premium zone in the 4-hour as well, I'm expecting the price to move into the discount zone and touch that giant imbalance. However, it needs fuel to go down there. What is the fuel? Fuel is your money. Fuel is your stop losses. Fuel is liquidity and imbalances. So fuel is you. Yes, you are the fuel of the market maker. Market maker loves your money, loves it so much. So what I did was actually quite simple. I placed a stop limit order above the equal highs here, just slightly above it, and started to wait for those equal highs to be hunted. Also, I assume that price may touch the imbalance, which is in the premium zone. A great place to short an asset. Equal highs, imbalances, and premium zones. The magic combination for sniper trading. More importantly, I had an amazing target below, which was in the discount zone from the 4-hour chart. An amazing equal lows waiting to be hunted. And a giant imbalance, thanks to the Fed interest rate decision and Jerome Powell. I think this trade should go into trading books as a case study. This is the perfect trade that you can ever encounter. I kept my target point just below the equal lows and within the imbalance. Why? Because liquidity and imbalance is the fuel again. Price easily can bounce from here to upside again. It is important to understand your targets really well. Equal highs and lows with imbalances are entry points as well as targets. Last week, I made a quick intro to PO3, power of 3. You can witness the same market structure here. Price starts to accumulate orders within a range without a clear direction. That makes a fake breakout above, trapping the beginner traders with manipulation. You'll ask how? Can you see the trend line here? What you have learned as a beginner trader is to trade the breakout from the trend line. Yes, it may sometimes work, however it all depends on where the trade is. This trend line breakout is fake. The biggest mistake that beginner traders make is that they try to trade every bull flag, every trend line or every breakout. However, the most important thing is that where these chart patterns are, you cannot trade all of them. Finally, the expansion phase. The price moves into its true direction, which was the discount zone, from the 4 hours with equal lows and giant imbalance. Okay folks, another adventure ends here. I tried to teach you every secret and detail of how to trade the traps with sniper trading, so you can use it in your trading life with minimum mistakes. The next video will be about a new pattern, the swing failure pattern. I hope you subscribe to the channel and like the video. Please take care and see you soon.